Hello and welcome to this week's Trading the Trend on Wednesday, the 26th of April 2023. Now, last week we went long the US dollar versus the Canadian dollar. And on this daily chart, you can see here that we did indeed break out of a downward channel. And the reason we went long is that in the past, every time we went towards the 133 area, we had a bounce back. And we expected the same to happen last week, especially since we broke out of this downward channel. And so far, we've had a very great trade on, nearly hitting our upside target at 136.90, but not quite. And since, as you can see here, if I draw a Fibonacci retracement onto this decline seen since the beginning of March, since we've hit the 61.8 Fibonacci retracement of that entire decline yesterday and may today stall around there, I would like us to cash in our profits on this trade and do so now at 136.35. Giving us a over 200 pip profit on this trade within a week, which is not bad at all. This week's Trading the Trend is to go long the S&P 500. And the idea here is to buy into some short-term weakness and to do so with a very short close stop loss, basically. And we expect perhaps earnings by the likes of Boeing or PayPal or Meta later out today, or other earnings to come in better than expected, as has been the case already with Alphabet and Microsoft. And this could then lead to the S&P 500 rising again. But also from a risk-reward point of view, it does make sense to put this trade on, because if indeed we do hold here, our stop loss is very close by at 4,070, just below the recent lows. And the upside target could be around the recent highs, around 4,135, making it a risk-reward of about 2.5 to 1. So that's 2.5 times more reward than potential risk. So today's Trading the Trend is to go long the S&P 500 and do so at 4,085 with a stop loss at 4,070, but on a daily chart closing basis. So not an intraday movement through that would trigger the stop, but only a daily close below that level, and an upside target at 4,135, making it a 2.5 to 1 reward to risk ratio.